Good morning, everybody. So, welcome to this Friday's review of the general ways of the world. So, I decided to do this morning's review based on the fact that we had our UK autumn budget announced by the current Chancellor, Jeremy Hunt. Um, whilst there's many things contained within the budget that was announced, I just want to really give you a sort of whistle-stop tour of the headlines, and of course, what we expect going forward and how it affects the UK economy as a whole, as well as what we see in the world. So, without further ado, um, the general topic of the actual budget, I would say, is stealth taxes, but certainly very upfront about these stealth taxes. And the narrative is to make the tough decisions now. So we have certainly a softer or a shallower recession, and also a shorter one at that from a UK perspective. So first of all, these stealth taxes, what are they? Well, in essence, it is freezing the various tax-free allowances or bandings that currently exist in the UK system. Most notably, you have the personal income tax allowance, which currently stands at 12,570. So this is the amount you can earn in the UK before paying any income tax. So that will freeze and it'll continue to be the case up until 2028. Also, the Chancellor decided to reduce the banding for when the top rate tax is applicable. So the top rate tax in the UK, income tax that is 45%, and it was for income earned over £150,000. This is now reduced to 125,140. Not sure what the 140 is about, but nonetheless, the allowances will certainly be kicking in next year. So this certainly is a tax on the higher earners, which is very welcome across the board. And I don't see for 1 minute that the higher income earners are going to be put off by this either and start a mass exodus of the United Kingdom. So that's the first form of stealth taxes, and that's because as we get wage inflation, so increase in your salaries as time goes by, unfortunately, you don't reap the full reward of that because the allowances are not keeping up with any inflation. It's staying static. So you end up paying more, lose a little bit more in real terms. Okay. Now, the second set of stealth taxes, that the way I see it, we have capital gains tax. Now, capital gains tax is, when you're locking in gain, sell a property, selling shares, funds, you have an allowance of £12,300 that you're exempt in a tax year. That's been cut. So from April, so the new tax year, April 2023, that is reducing from 12,300 to £6,000. And then from 2024, reduces further to £3,000. Now, a lot of us who still have assets in the UK, a lot of us living in the UK might think this is a harsh thing to be done. It is needed. It is another way to raise taxes. But just remember this, the UK, even with these cuts, still has some of the most generous allowances of the G7 nations. Certainly, my job working in Europe, I don't see these allowances for clients living in Spain, living in France, living in Portugal, Italy, so on. So the UK is still extremely generous from that point of view. ISAs have remained completely untouched, which is welcome news for those who still have ISAs. And the other stealth tax, of course, is the dividend tax. Now, dividends are your dividends issued by shares, or if you have equity in a private company and they want to distribute dividends. Certainly those who are self-employed still with limited companies where you are paying yourself both a bit of salary as well as dividends. Traditionally, first £2,000 is tax-free, tax-exempt. That's being reduced. So from 2023, April 2023, that is reducing to £1,000. And of course, from 2024, it's reducing to £500. Okay. So that's I think the one area of stealth taxes that affects a lot of us. Okay. So I think it's needed. It is aimed at certainly the way I see it, aimed at your mid and higher income earners. Yeah, I think it's the fairest way, in my opinion, as well, to spread the burden. The other self tax, of course, is the IHT threshold. That is obviously we know the IHT was already frozen to 2026. So this is your nil rate band for inheritance tax, which stands at £325,000. So the Chancellor has decided to extend that an additional 2 years to 2028. So in real terms, if you think about it, we expect house prices to rise, we expect stock markets to rise, general value of things to rise in terms of your worldly possessions, which means that, if you die much in 2028, we expect the value of your estate now should certainly be worth much more by the time you reach 28, unless, of course, you had a chance to spend it all. That simply means that you're going to have more exposed to the actual inheritance tax itself. It's worth mentioning that after all these interesting stealth taxes have come in, what are we, or what is the economy or other parts of the population getting in return? Well, pensions. Now, pensions being a bone of contention with the state pension and the triple lock. The Chancellor, I think, would be political suicide to certainly remove the triple lock, and as such has kept it in place. So the triple lock for the state pension remains very much in place, and the increase, of course, is just a fraction above 10%, which kicks into play in April of next year. And then, of course, we'll see where things go. Now, there's also a lot of pressures on the whole so-called windfall taxes, another way the government's trying to fill up his coffers. And of course, he has increased the windfall tax. So for those of us who want to better understand the energy windfall tax, this is a tax where energy markets have made extraordinary revenue due to the actual short-term swings of inflation within the marketplace. So it's really anything over and above what their general anticipated profits would have been in normal conditions. So the taxes have increased, which obviously will increase the tax intake for the UK government, and of course there will. Well, we like to expect governments to spend this wisely, of course. I'm not really going to go through any other headline part of the budget itself. You can read more on the link that I'll provide here. Go onto the alexanderpeter.com website. We're in the news section. We have a lot of resources that's published constantly. If you'd like to be entered in on the actual distribution list of these regular newsletters, then do send me an email, okay, or put it in the comment below and I'll add you to our system. My takeaway from all of this is I have a positive outlook on things in general, and the way I see this is it's certainly much needed to increase taxes, albeit not actually increasing the rate of tax, but freezing or reducing allowances. This will help the UK come through recession. I would agree with the Chancellor. This will help the UK come through the recession in a much shorter period of time, and the impact a much lower impact. We certainly don't need mass unemployment. We certainly don't need mass repossessions of the housing market, and we don't need a repeat of the financial crisis of 2008. So I think all these measures go certainly a step in the right direction. Now, what does this mean for investors in general? Obviously, as you know, our client base is Europe and global. Our investment models is very global. The UK actually remains a very attractive place to invest. Especially multinational companies who are listed in the UK. So talking about the FTSE 100. Also, the FTSE 250, which is a bit more domestic, has been hit hard. This will go some way to focus in on stabilizing the market. And look, we don't expect massive recovery or sustained periods of recovery in the short term. It's going to be over the medium term, but you would get in now at the end of the day. You would get in now to enter at a lower level. Things might get worse before they get better, but this is the nature of investing. No different to the housing market. You know, we buy something, we don't know if it's going to rise straight away. It can fall first, but in the medium to long term, we know markets, property, and any good investable assets do actually rise. Now, the other bit is obviously what's happened with the bond and the gilt market in the UK, which had a massive crash because of Kwasi Kwarteng. Now, I do think this goes to stabilize a good element of the gilt market. So that's the UK government debt. So for those who have had to sit through the pain, I think it's very welcome. And again, we're going to see other opportunities, people around the world sitting in cash. They might now start going into the UK gilt market. That's a positive for them. That's also a positive for those already in the market because we start to see some good recovery coming our way. So I think overall is a positive budget. Painful, yes. For those of us living in Europe who still have connections to the UK, assets in the UK, then obviously take heed of this. If you do want to have a conversation, then just reach out to me. Be more than happy to have a conversation. Well, look, guys, read more, please, on the news that we published. And any questions, feel free to reach out to me. Thank you again for watching and listening. Bye now.